Hello, my name is Maria Bezubova, and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Also please check my interview with Matthew O'Leary, Managing Director of Aquifert, international trading and distribution company for specialty fertilizers, with focus at water solubles. It was published last Wednesday and contains a lot of insightful information about water soluble market and its trends. Today is 1st of July 2024 and it is a weekly markets update. Let's have a look at the news of week 26 and see what are the next trends. Egyptian urea news continue to shake the market for already a month now. The market has just cooled down amid the information about gas supply restoration to the Egyptian plants. But it was too early to rejoice. At the beginning of last week, gas was cut again, and now all Egyptian production is halted without any concrete information about coming back on stream yet. The main problem isn't the increased need of fuel for power generation amid extremely hot temperatures. In June, average temperatures significantly surpassed the average level of past years. Almost half of the month it was over than 40 degrees. The forecast for July also shows similar levels, slightly cooling down by several degrees in August. Because of this extreme heat, daily power outages increased to 3 hours from 2 hours per day last week. Israeli gas supply is not restored yet, and as a result, Egypt needs to allocate about $1.2 billion to ensure immediate supply of LNG and mazout for power generation. On June 26, Egyptian General Petroleum Corporation awarded a tender for total 20 cargoes of LNG, securing supply for summer months. The price awarded was from $1.6 to $2 per MMBtu higher versus TTF benchmark. 19 cargoes will arrive through mainly July and August, while 1 cargo is planned for September. Market players are holding from any evaluations fertilizers production coming back on stream because everyone wants to see actual inflow of these gas volumes into the system first. Such production halt might result in the loss of 140 to 150,000 tons of urea per week for the international market. Obviously, Egyptian producers don't propose any volumes, but continue to ship from stocks against previous sales. However, the market reaction to this news was quite calm. The prices didn't jump as they did at the beginning of June, and there are several reasons for that. First of all, demand in Europe and Turkey is coming to its end, with harvesting season started, so only small sales were registered. Second, Brazil demand cooled due to softening grain prices, and major importers indicate that they will hold their purchases until price level clarifies. Third, but definitely not least, India issued a purchase tender, and it was quite a sudden move, because it was expected later in July or even in August. The tender is supposed to close on July 8, thus market players are waiting to see actual volumes and price level proposed. Taking into account that Chinese urea will be out of the export market, Russian and Middle East product will dominate the ground. India hasn't specified the target volume, so government will look at price level proposals and will take it easy amid healthy domestic stocks level. Various sources indicate that purchase will be likely around 800,000 to maximum million tons. And if price level is high, then purchase will be even lower. So, in a week from now, perhaps there will be more clarity regarding further trend in urea. Hopefully with positive news from Egypt emerging as well as tender results. As a result of all those developments, urea prices firmed about $5 in most of the regions. Algerian price reached $370 for immediate sales, amid closure of Egyptian productions. And this was the sharpest increase of all. Limited sales from Middle East took place at $345–350 FOB. In the Black Sea, SOCAR held tenders for sales of 30,000 tons of bulk urea from Poti and 10,000 tons bagged from Trabzon. Only part of proposed volumes were purchased actually at $335 for bulk and $345 for bagged product. NOLA values increased to $295 to $308 per short ton. There is no availability from Indonesia or Malaysia, and Middle East producers are very comfortable with July mostly sold out. So let's watch development next week. Paper values reacted immediately, moving higher. FOB Egypt future for July indicated between $360 and $370, $25 higher versus a week ago, calming a bit in August to $355 to $360 for August. NOLA values indicated at $305 to $315 for July and $310 to $320 for August for short ton. Uncertainty in the urea market put also ammonium sulfate purchases on hold. Softening crop prices add hesitation to European buyers. Prices for Chinese standard caprolactam grade product was indicated at $145–150 FOB China, slight downward correction versus a week ago. And granular product prices stayed in the range of $170–180 FOB. However, buyers are seeking for lower levels and are not eager to purchase. Further dynamics in urea will show the way to sulfate. In nitrate segment, as well as UAN, the demand in Europe is finished, and decreasing crop prices don't support purchasing for the next season. In the US, prices fell after CF Industries issued its summer fill figures that turned out to be higher versus those of a year ago. This held buyers from purchasing now, waiting for potential price decrease. In ammonia, Yara and Mosaic agreed for the new monthly price at the level of $415 CFR, which shows $15 increase versus a month ago. Before this happened, early in the week, the sales from Trinidad of 25,000 tons was done by Nutrien at $375 FOB, which paved the way to new contract price for Mosaic. Bearish trend that dominated in the market for a long time changed very quickly last week amid supply curtailments west of Suez. Apart from Egypt being out of the market, restrictions for gas supply to Trinidad producers will continue in July. Demand for European producers is in place, thus prices increased by $10 to $450–470 CFR. And understanding in the market is that price might escalate to the level of $480. Other news from ammonia market: Mitsui announced last week that it has agreed with partners to commence construction of a green ammonia production in UAE, which is scheduled to start in 2027. It is planned to produce 1 million short tons per year of ammonia with lower carbon footprint. Phosphates demand in key markets continues firming, so price increased by an average $5 for DAP and almost $10 for MAP. OCP sold over 30,000 tons of DAP last week at $575 to $620 FOB for second half July-August loading. MAP supply remains very tight, so price increase for supply to Brazil reached $620–625 CFR level. Situation with subsidies regime for phosphates in India hasn't been clarified last week. All tenders of last week were scrapped, either due to high price proposed or no proposals at all. With current subsidy regime, the break-even point for importers is evaluated at $510 level. However, realistic proposals are priced about $580 CFR. Obviously, the government needs to immediately intervene if it plans to make large-scale purchases sometime soon, of course. As an alternative for DAP, Indian importers are looking into different high P and PKs, which sales increased by 30% versus a year ago during the last 3 months. Moving to the fundamentals, European natural gas price slightly increased versus a week ago and fluctuates at the level of 34.5 euros per megawatt hour. Despite fears last week, Russian gas continues to flow to Austria, as the payment was conducted according to the contract. However, uncertainty now is a new norm, because every month before the 20th, there again will be discussions if this flow is sustainable. ICES forecasts decreasing month-to-month demand for gas in Europe in July, both from industrial and residential users. So if nothing extraordinary happens, the price should stay stable. However, the key question mark remains supply of LNG, as we already discussed last week. ICES forecasts that global LNG market in July will be oversupplied by 2.2 million tons, and imports to Europe is expected to increase by 17%. Growing dependency from LNG is stressed in the annual report of International Gas Union, called World Market of LNG, that was issued last week. It states that the world is clearly moving from so-called golden age of gas to the golden age of LNG. LNG trade increased in 2023 by 8.4 million tons and reached over 400 million tons. The need to replace piped gas from Russia to Europe pushed LNG sector boost, and we see the results: immense liquefaction capacity increase. If all liquefaction capacity is about 500 million tons, the proposed capacity in pre-FID stage exceeds 1 billion tons. Need to ensure energy security triggered by the war of Russia against Ukraine pushes continuous investments into LNG. As we discussed today, it becomes more and more important also for the fertilizers producers. The example of Egypt is self-speaking. US in 2023 became the largest exporter of LNG, with a large chunk of its exports being targeted to the EU market. However, this year in the US, the above-normal hurricane activity is being observed and forecasted in Atlantic Basin between May 1st and November 1st. If this were to affect US LNG liquefaction facilities, LNG supplies to Europe would almost certainly be reduced in Q3. This is a factor that European fertilizers producers need to closely monitor, because it might inflate cost of production closer to the main application season. US natural gas futures continue decreasing amid increased output and higher than average level of storage this year. However, also higher than average consumption level due to extreme hot weather is forecasted to last at least until mid-July, so price level perhaps will not slide too much. Agricultural commodities markets demonstrated in June the worst month in past 2 years. The market was eagerly expecting the acreage and stocks report from USDA, which was issued last Friday, hoping for some support to sliding prices. The report showed higher acres produced for spring wheat 2024 and record high stocks, which drove future price down again. Wheat was traded at $5.7 per bushel. Also, the report is bearish for corn, showing higher acres and higher stocks. Thus, corn futures immediately also dropped by 3% week on week. Corn was traded at $4.2 per bushel. Same for soybean. Acres planted are expected to be higher versus a year ago, as well as significantly higher stocks, which together with favorable weather put stress at prices. Soybean was traded at $11.5 per bushel. Other factors that support soft prices are expectations of better precipitation in Ukraine and southern part of Russia in July. That might result in better yield than expected before. Also, strong US dollar supports this downward trend. As a result, fertilizer affordability ratio worsens and puts additional stress to the second half-year purchases of agricultural producers. Moving to the shipping industry, we face another week of increasing indices. Containerized freight index increased by 7% just in a week. Reasons are the same: Houthis attacks in the Red Sea and US tariff increase for Chinese goods. And the trends are the same as well. Last week, congestion across Asian ports have hit levels not seen even since COVID-19 pandemic. With total capacity of over 2.4 million 20-foot equivalent container units, we're waiting at anchorages as of mid-June, with 60% of ships waiting at anchor located in Asia. The average time to wait for berthing reaches up to a week, when usually it is much less than a day. So unfortunately, need to state that there will be no decrease in rates anytime soon. The Baltic Exchange Dry Index showed minimal increase by 2.5% again, driven by demand for capsize. Shipping industry feels quite comfortable with current rates, so there is no signs of declining shipping costs in upcoming month at least. To sum up, Egyptian drama continues, but market reaction this time is not as sharp as it was several weeks ago. Market players are waiting for more clarity regarding both supply from Egypt as well as demand and price level from Indian tender. Purchases are mostly on hold, not only for urea but also for sulfate. Phosphate segment continues to be led by bulls due to piling demand, but uncertainty with Indian subsidy regime is adding instability. Agricultural fundamentals are hitting 2 years low, with wheat being the leader of anti-rating. This adds more uncertainty to the second half-year purchase behavior, driving affordability ratio for fertilizers down. So let's see what is next around the corner. But it will be already next week. Thank you for watching. Let me know in the comments how fast do you think urea upward price correction happens and how large it will actually be. Please subscribe to the channel, put like to this video, and see you soon.